What's up, guys? Welcome back to another video. And in this video, we're going to be discussing the new SPAC ETF, which trades under the ticker symbol SPAK. So I just wanted to give an overview of the SPAC, the holdings that they currently have, the price they're trading for, my overall thoughts on it, and if I'll be buying it and who should buy it. Before we get into it, if you guys don't mind just dropping a like and hitting subscribe, it really helps out the channel, and thank you so much for 5,000 subscribers. You guys are absolutely amazing, and just the support has been incredible. Definitely check out the links in the description. We have a free Discord server with over 550 people in there talking and helping each other out with various information. A ton of information on SPACs, so check it out. It's completely free. I also have referral links to Robinhood and Webull when you sign up with those brokerages. And with Webull, you just have to deposit $100 and you get 2 free stocks. It's literally free money, so definitely think about doing that. And let's get into it. So it says here that the Defiance team is excited to bring to the market the first SPAC ETF, and this will be on the New York Stock Exchange under the ticker symbol SPAK, and you can literally buy it today. Picking the winners of individual SPACs can be very difficult. However, the ETF structure allows for investors to access the most liquid SPAC IPOs in a diversified basket. So that's how ETFs pretty much always work. SPAC allows both financial advisors and retail investors to participate in an IPO private equity style of investing, which until now was only available to large financial institutions. And this statement was issued by Defiance ETFs earlier this morning. So obviously they understand that SPACs are the new wave, and in their statement here it says SPACs have grown in popularity as they have increasingly attracted high-worth, credible sponsors. As the quality of their founders and the success of their target company grows, so does their integrity in the wider investment community. So far in 2020, SPACs have raised $22.5 billion to spend on deals, exceeding the record of $13.6 billion raised in 2019. Bill Ackman launched the largest ever SPAC in 2020, raising $4 billion for Pershing Square Tontine Holdings, which has yet to declare their target merger company. So what is generating the confidence? And that's simply the success of previous SPAC mergers, such as Richard Branson's Virgin Galactic, which has a valuation of about $4 billion now, or the boon of sports gambling, DraftKings, which is now valued at more than $10 billion. So the purpose of this ETF. The goal is to provide the investor with diversified exposure to the SPAC sector. Just like most of the ETFs out there, such as QQQ or VTI, it's created to limit your risk through diversification. This index is a passive rules-based index that tracks the performance of the common stock of newly listed special purpose acquisition companies or SPACs. Example, warrants and initial public offerings or IPOs derived from acquisition companies over the preceding 36 months. SPACs are companies with no commercial operations. They are established solely to raise capital from investors for the purpose of acquiring one or more operating businesses, as most of you already know that. So some positives about this ETF coming to fruition would be that it brings positive attention to SPACs. More people will learn about SPACs and invest in them, or through this ETF. The ETF can actually pump funds into specific SPACs that you may already be invested in, which is a good thing. And catalysts may present themselves, like when ARK buys into something that usually equals a pump. So maybe if this ETF acquires more of something you're already in, that might shoot the price up as well. So here are their top holdings, and their holdings can consist of SPACs that have not merged or SPACs, that have been acquired and they are currently trading under their own name, such as UTZ. That was formerly known as CCH. There's a lot of SPACs on here that I personally would not invest in, so that's something to be aware of. There are some good ones on here that I am personally invested in, such as CCXX, FMCI, TRNE. There are quite a few good ones on here, but there is a lot that I would not buy into. So my thoughts on their holdings. I'm not a huge fan, and I really only like a few on their list. So basically, as of October 1st, the funds are subject to change at any time and should not be considered recommendations to buy or sell any security. I feel like I could put together a better ETF of SPACs, but I guess, they can always add or take away certain SPACs on there. Now, keep in mind, this is considered to be non-diversified, which means they could have DraftKings be 50% of their portfolio or Nikola be 50%. They have no limitations. They can diversify as they please. And it says this may increase the fund's volatility and cause the performance of a relatively smaller number of issuers to have a greater impact on the fund's performance. The fund is new with a limited operating history. So that alone right there kind of makes me feel like I would rather just pick the SPACs I like and do my own DD on them, and feel confident in investing in individual SPACs. So it also says here that the fund pays transaction costs such as commissions when it buys and sells securities. A higher portfolio turnover rate may indicate higher transaction costs and may result in higher taxes when shares are held in a taxable account. These costs, which are not reflected in annual fund operating expenses or in the example, affected the fund's performance. Because the fund is newly organized, portfolio turnover information is not yet available, so you might even be paying more of an expense ratio than they initially anticipated. So personally, I believe in my own abilities and knowledge on SPACs to invest individually, and it's worked for me thus far. Now keep in mind, ETFs do have expense ratios, and this one in particular says the total annual fund for the operating expenses is 0.45%. So, if I could just do this myself without paying an expense ratio, that's what I'm likely going to do. However, people that want to invest in SPACs but either don't have the time or energy to manage their own holdings may find this attractive, or they just don't have the time to do the due diligence on each individual SPAC and read all the boring SEC filings and keep up with the companies. I totally understand it is a lot of work. This also limits your risk of buying into a bad SPAC just because it's so diversified. Even though it does say that it's not very diversified and they can pretty much invest whatever percent they want. So SPACs are definitely the new wave, hence why there's now an ETF for it, but I won't be buying into this ETF. So here's my counter to protecting yourself through an ETF for SPACs, and yes, diversification is great in most cases, but they're considered to be not that diversified. SPACs are very volatile and consist of a lot of selling off, so that's one thing to consider. And also, are there really that many SPACs that you want to be in long term? A lot of people just play SPACs for the hype and then they sell them off for profit. And there's only a few, a handful that I am going to be holding long term. However, with SPACs, there's almost always a baseline floor of $10. So do you really need protecting from a SPAC failing? For example, CCXX is currently, let's say $10.10. So if you bought 100 shares, if it fails, you can redeem your shares for $10 per share. So your max loss is $10. However, with an ETF, they would just simply replace the SPAC, which is another positive, but it doesn't seem as appealing as if a company failed in something like QQQ and protecting against that. So that's pretty much it, guys. Just a quick overview of this new ETF. It's pretty interesting, but I think I'm going to avoid this one and stick to individual SPAC picking. Definitely let me know your thoughts below in the comments. Are you interested in this? Do you think this is a cool and good idea, or are you just going to stick to picking your own plays? As always, guys, please like and subscribe. Get your free stocks in the description, and have a good one.
Stacking vertical, ooh, counting sideways, ooh, ain't by my cake, ooh, get out my